What's going on, guys? I hope you're having a good day. Today I want to teach you guys a really good strategy that doesn't take very much capital, and basically this is one of the best strategies that I really have in terms of option trading. Now if you guys take a look, the VIX is up a little bit today. We're up actually 5%, so there's a lot of volatility in the market, which is actually a very good thing for option traders because essentially options become more expensive when there's higher volatility. So this strategy is perfect for me to teach you today because as we see more volatility, option trading will become more profitable. So if we take a look at the VIX over the past 6 months, it has definitely had some fluctuations. It was as low as about 15, but currently sitting at over 18. Options are becoming more attractive again. So before I get into the strategy that I want to teach you guys, I just quickly want to show you guys that I am up about 34% in the private Discord group. I have taken a lot of profitable trades and my average percentage collected is about 4.26% on each option trade that I have. And roughly, if I was able to keep this up, it would be about 486% return. Now, obviously that's a huge return. I don't think I can continue at that pace. However, I do think that I'm going to continue beating the market with my option strategies and specifically what you're going to be learning today. So if you are interested in the group, make sure to submit an application in the description below. Now, specifically what I want to take out today is I want to show you what an iron condor is. I'm going to show you what that means, how to play an iron condor, and really how to make really good profits without having to put up so much capital. Now, the stock that I want to show you guys today is Square stock. I've taken a look at Square's chart. I'm going to click chart right here on Yahoo Finance, and this stock has some really big volatility. However, right now it's a very interesting time to invest in the stock and specifically to use an iron condor strategy, and that's because the volatility has increased tremendously after the huge pullback in Square. So what I think is going to happen is if I actually look at the 1 month chart right here, Square is actually only slightly below the moving average for the 60-day period. So right here, 60 days, the moving average is about $248.59. Now, Square stock is currently sitting at $226.41. And actually, if I look at the Bollinger Band, now again, guys, quick primer, it's sort of that range where I can imagine the stock is going to stay within. And that is basically my assumption when I go ahead and trade options. And specifically for an iron condor, Bollinger Bands are extremely important because an iron condor, the way you make money off of selling iron condors is that the stock needs to stay within the range that you sell the iron condor within. I'll get more into that very soon about strike prices, which strike prices to pick, the collateral that you need, and the typical behavior of closing an iron condor. So this is going to be a very detailed video. But basically, a Bollinger Band is one of the most important technical indicators I look for, especially with iron condors, because it's going to tell me where to sell my strikes at. Now, right now, if you guys take a look, it's going to be about $280 on the top end. So what that means is, and actually if I go right here and I change the Bollinger Band from 3 to 2, so I just changed the Bollinger Band to 20 days, which is basically 1 month of trading, and then 2. This 2 stands for standard deviation. 2 standard deviations is going to capture 95% of the data. The only reason I had it set to 3 was because I was probably looking at a stock that had earnings. So I expect Square stock to stay between the range of $267 on the high end and about $215 on the low end. And also if you look at the RSI, it's 39, which is right around the middle. Square is just a little bit low. I'm going to show you what that means in my assumptions later on. So now let's get back to Robinhood, and I'm going to go ahead and trade Square options. So as you guys can see, I just initiated a position into Square. I am basically flat on the stock. I'm down about 0.47%, about $100, and I'm going to go over to trade Square options. Now, the assumptions I'm going to be making is that Square is not likely to go up too much higher or really fall that much lower because it has already had a significant pullback here. I don't really see any catalyst that would take Square towards the 267 top again, so I'm going to be very safe selling in this region right here. Now, going back to Square options, the first thing you want to do is pick a date to trade the options. Now, for me, I usually go for weekly options. However, recently, because I have put so much time into the private group, I have been going more for monthly options. And that's just a preference. It doesn't really matter if you want to go for weekly or monthly. Both can be very profitable as long as more often than not, you're going to be selling out of the money options. And what that's going to do for you when you sell out of the money options, you're giving yourself a high probability or a high likelihood of those options expiring out of the money, and that's very good if you're going to be selling an iron condor. Now, let me basically show you the mechanics of an iron condor and how to pick the strike prices properly. I'm going to go down to December 17th. That's about 1 month from today. Again, you can go for a weekly iron condor. Some people in the private Discord have done bi-weekly, monthly, and I would say even 3 months out. However, I wouldn't really go too much past 3 months because you will collect a very high return, and oftentimes I will see students collecting 10 to 20% return, which is a fantastic return. However, for a 10 to 20% return. Although still good for a year out, it's much better to get a 10 to 20% return in 3 months, because then not only do you get to place more positions, but if you can repeat that 4 times, well, you're going to have a much greater return throughout the year and have less time in between. In other words, your ROI is the same, but your payback period is faster. Now, looking at December 17, it doesn't really matter if you want to start from the put side or the call side. I tend to start from the put side because I am more comfortable selling put credit spreads, and sometimes I'll sell a put credit spread to get started with the iron condor, and then I'll just stop right there and not even sell the call side of things, because I'll realize that the stock is very cheap, and just understanding the put credit side of things helps me understand the call credit side of things. And now let me explain what a put credit spread is and how to open up an iron condor. The way you want to open up an iron condor is by selling a put credit spread and then a call credit spread. All an iron condor is, I'm going to put up how it looks like on the screen right now. You benefit when a stock stays within a certain range. It can't go below your strike prices for your put credit spread, and it can't go above your strike prices for the call credit spread. So I'm going to go back to Square's chart, and I said on the bottom side of things, it looks like about $215 per share is the bottom range for Square. Now this is in the past 20 trading days. So if I was to go out about 1 month, that's basically 20 trading days. So again, I'm going to go to about $215. However, you guys will already notice here, what I just noticed right now is that there is no 215 strike. That's totally okay. In fact, it's even safer because I'm going to go for the 210 strike rather than 215 strike. And that's because I like to build a margin of safety whenever I'm trading options. So although the chart will tell me one thing, oftentimes I will actually put extra protocols and extra measures into my assumptions so I can be safer with the range that I'm trading iron condors. So the situation actually ends up being pretty perfect. I'm going to open up the 210 put option. Now I'm going to expand this, open this up, and show you guys the delta. So the delta here is 0.24. So typically when I'm selling put credit spreads or iron condors, I'm actually going for an iron condor or a put credit spread that is going to be somewhere around that 10 delta mark. Being at 24, in fact, this is a little bit risky for me, although this would be a perfectly fine trade to make. In fact, it actually passes all of the checks that I have. I'm going to go even a layer safer by going for the 200 put option. So now opening up the 200 call option, the delta is 0.14. Now this is what I'm talking about in terms of a low delta being a sweet spot, because when the delta is lower, your chances of success are going to be much higher. In fact, here the delta is 0.14, which means that this option has a 14% chance of expiring in the money, which means that you have an 86% chance of the option expiring out of the money, which is a fantastic thing because we're going to be selling this option right now. Now, the first thing I'm going to do is I'm going to make sure that I'm selling puts, because I can't tell you how many times I've had a student go ahead and buy a put and do the reverse of an iron condor. And basically, they have pretty much paid money rather than collecting money. So first off, step number 1, make sure that you're selling a put option. We're going to click right here and collect $205. Now, this is really important because a lot of people say, well, hey, I can make $207 right now. Why would I even continue with an iron condor? Well, the reason is because selling a put option requires a lot of capital. In fact, when you sell a put option, you are actually committing yourself to buying 100 shares of stock at $200, which is actually $20,000. Now, whoa, I completely understand. Not everyone wants to put up $20,000. So the iron condor that I'm going to be trading today is only going to cost $1,000. So rather than having a $20,000 position, I'm going to show you how to make a lot of money from just as little as $1,000. So what that's going to look like, and step number 2 is you have sold a 200 put option. Well, that's fantastic, but now you have to put up $20,000 worth of collateral. The way to go around this and basically not be required to have to put up the collateral is by going ahead and buying a put option. That's because even if the stock were to fall down tremendously, let's say for whatever reason, Square had a really big problem and it went down to $0. If you sold a 200 put option, you would be required to buy 100 shares. And that would be really, really bad because you own 100 shares of absolute dog doo-doo, right? I mean, it's worthless, right? Now, the way to combat that is by buying a put option. So I'm gonna be buying this 190 strike put option. What happens is, sure, I collect a little bit less money. However, even in the worst case scenario, even if the stock went down to $0, your 190 put option would benefit by $190. What that does for you is that the only risk that you have is really from $200 to $190, which is $10 times 100, which is $1,000. So right now you can go ahead and collect $96 for a put credit spread, and you would make 9.6% on $1,000. But wait, it gets even better, because if I scroll scroll down, you actually collect $96, but now your risk is only $904. So your return is over 10% in a single month. And the only way you could lose on this trade is a maximum of $904, and if Square were to go down to $200. But you have to ask yourself, Square is unlikely to go down to $200. So this is a very certain trade. In fact, the probability of this trade being successful, again, is 86%, or even higher right now, it's 86.5%. That is the first thing that you have to do to open up an Iron Condor. Now, the second thing that you have to do to open up the rest of the Iron Condor is pick your strike prices for a call credit spread, or basically just the call option side of things. Now, going back to the Square chart, I'm going to take a look at the very top end of my Bollinger Band. Now, the Bollinger Band is $267. So going back to Robinhood, I understand now that I'm going to be selling around $267. And right now I have already found the perfect option. So because I know the top of the range is 267, I want to be as close as possible to 267. Now I see a 270 call option, so I'm going to expand this and take a look at the delta. And in fact, this is a fantastic option because you can see right here that the delta is 0.09, or basically the delta is 10. A 10 delta means that the chances of Square going up to $270 per share is only going to happen 10% of the time, or 1 out of 10 times, which means again that you're going to be successful the difference. So 90% of the time, or 9 out of 10 times, you're going to be successful. This is what I'm going to do. I'm going to do basically the same thing that I did as puts, but now I'm just going to do it for calls. You guys will notice right here, things are about to get very interesting. So remember this number, or write it down as you're watching this video. It's really helpful to take notes. You can always go backwards and rewatch the video, but write this down. $96 and your max loss is $904. Now, what's going to happen is some very magical stuff, and it's actually just plain math, but it feels like magic because it almost seems too good to be true. So right now, the 270 strike, I'm going to sell and collect $125. But again, if you were to sell this option, you would have a tremendous risk on the downside. As you guys can actually see, your downside is pretty unlimited. As the stock continues to rise, you will keep losing money. So the way you combat this again is, first of all, you're going to sell a call option for the closer to the money, or the closer strike to the current price. Now you're going to buy and protect yourself by buying the next strike out of the money. The next strike that is out of the money from 270 is 280. So now I'm going to go ahead and buy the 280 strike price. So buying the 280, I'm going to spend 79. And if you guys will notice, I have collected 123. However, I have spent 79 to protect myself. Now, if you notice this and you actually wrote down the previous numbers you had, you will notice that things have really improved. Before it was about $96 and $904 worth of risk, but now things have gotten a lot sweeter. Actually, the max profit now is $140 and the max loss right now is $860. Things became a lot better. Now, let me explain why, and in a moment, I'm going to get into how to close this position and how to set a proper stop loss. But the reason why things became a lot better is because the stock can only end on one side of the equation. Basically, the stock can end here. If it ends here, it cannot end here. Now, if it ends here, it cannot end there. Therefore, when you open up both sides, puts right here, this is a put credit spread, and then a call credit spread, what happens is only one side can happen. Now, every brokerage knows that, and it's also built into almost every single trading software. Therefore, what ends up happening is you don't have any extra collateral that you have to put up. So if you open up a put credit spread, it's pretty much free in terms of collateral to go ahead and sell a call credit spread. Or the opposite is also true. If you sell a call credit spread, you can always buy a put credit spread at no additional collateral because only one side of the equation can happen. Therefore, it almost always makes sense to sell both sides and create an Iron Condor. One of the downsides with Iron Condors is because you have 4 option positions, it is sometimes difficult to keep track of. However, if you have some time and energy, this is a fantastic strategy that requires very little capital. You can 5x your money with this stupid cheap option strategy essentially. Now, let's quickly discuss what needs to happen for you to become successful in this trade and when you should close it and how to set a proper stop loss. So what needs to to happen in this position is that you need Square to stay within this green range. As long as Square stock just goes up and down, as long as it doesn't go below $200 per share or above $270 per share, which is a big gap, guys. In just one single month, the stock would have to move tremendously for you to see a loss. And this white line right here is the current Square price. So as you guys can see, it's pretty much in the middle. And as long as Square just stays within this range, you're going to end up collecting this full $139 and you will get all of your collateral back. Now, the reason why I go for low delta, although you get a lower return, that low delta ensures that you're going to be successful pretty much 9 out of 10 times. And I've been much more successful because I also include technical analysis and I've been trading for nearly a decade. So a majority of the students in the private group have been getting even better returns. And as I've already showed you guys, we're up 581,000 in this single portfolio, but I also have a scaling with spreads portfolio where I'm turning $7,000 into $17,000 and I'm already up over $1,000 in scaling with spreads. So now in terms of closing this position and setting a proper stop loss, what I end up doing is most of the time, and in fact, it's pretty much 95% of the time, I just let the options expire and I don't touch them. However, if the options go close to the money, let's say that Square goes to maybe $200 or even $198, or let's say it goes the opposite way, it goes to $270 or $272 or $273, what I end up doing is I monitor the trade, and if it goes 70% not in my favor, so let's say that the total risk is $862. If I end up losing about $560 or about $600, I set a certain limit. I actually give a plan for myself when to close the position, and I properly set a stop loss at around 70 to 80% of the max loss. That way I can ensure that I don't have a complete loss on my hands and I'm closing a position that's unprofitable at 70 to 80% of a loss. So setting a stop loss is really important, and I recommend most people just monitor the position. Don't have a stop loss in right away. Monitor the position for a few days, but definitely in the last week, if the iron condor is not going in your favor, then you can think about setting a stop loss. But at first, usually when I begin trading, I have a stop loss set in my head, but I don't actually put the stop loss in, because what happens is sometimes on a bad day, your stop loss can get accidentally triggered and you can end up losing your iron condor for a big loss. And then the next day, in the next couple of days, that iron condor ends up fully recovering because the stock ends up moving back to its mean range. And then you end up being really upset because you had a stop loss in. So be very careful with your stop loss, and I would recommend most people to go into a trade understanding what type of stop loss they want to set, which is around 70 to 80%. However, don't close the position too soon. I recommend a lot of my students to look at the last week of trading and then to start thinking about closing out the position if it's not going in their favor. All right, guys, and real quick, this is the scaling with spreads sheet. It's up over $1,000, 15% in the past couple months, and the average percentage collected per trade is about 7.11%. So love to have you guys in the private Discord. Either way, thank you for watching. I hope you learned a lot, and I'll see you guys in the next video.